Hello, welcome back to Core Finance. I'm Matt Brown. I'm joined by Eddie Tofpik, head of FX at ADMISI. We're going to look at two currency pairs, dollar yen, Aussie dollar, and the dollar. Starting off with dollar yen, breaking down a little bit here.
Well, this is the thing that last time we spoke, I said to you there was a chance here for a very, very large head and shoulders top. And it's still a question over it. We formed the first shoulder between early September through to mid-October. The second, which is a split head, because of that drop down around about the 30th or thereabouts, that was formed from the middle of October to where we are now. Now, the angle of the neckline could be pointing lower. It hasn't done anything as such at the moment, but you've got some really interesting support underneath the market, which is now starting to kick in. The only things I'd say, the lagging indicators are still showing it's still more bearish pressure. The question is, will this actually form this head and shoulders top? If it does, then you've got to be looking at some point in the next 2 or 3 days, maybe early next week at the latest, for a move back up, potentially as high as about 113.5. And then to fail, and then to come back down if it's going to form that. Otherwise, we have a different pattern on there, and there's nothing at this particular moment I can see that is that. There are lots of bullish things out there. Most of them are lagging stuff that's actually coming in later into the market. But at this particular point, though it's coming down, it's doing the right thing for that ultimately a bearish pattern. But right now, it needs to sort of maybe potentially, if it's going to form that pattern, hold a bit of support, try up again and fail.
Very exciting one to look out for, indeed. Aussie dollar.
Yeah,
I love this chart.
Yeah, it's a lovely. What do you want me to say? It's brilliant. It's achieved its target, which was around about the 75-60 area. The thing that's now formed is actually a horn bottom. We've had one dip, pull back up, and then a second dip to the same level of support. And there's a big level of support between 75.28 and 75.18, which is where it's been holding at the moment. It's what it does if it can get to 76.5. If it closes outside of that channel line, then we have an attempt at 77, which is long moving average. Then we have potentially an attempt at 78.5, which is the medium moving average. There's a lot of resistance above that, but that will be the first real try on the upside since mid-October. You know, the whole of November has gone by, and it's really not tried that channel line. The short moving average has been a quite good indicator of the angle of attack. That's the red one on there, and that's trading around about 76.33 at the moment. Let's see if it manages. If it doesn't, which is still the main cause, then it's going to go further down.
Fantastic. Eddie, thanks very much for joining us.